Hello everybody, on today's episode we're going to be talking about top 5 reasons why credit card churning will destroy your credit. Nowadays, everybody's pumping bonus promotions and credit card churning. There's all these other YouTubers, Google articles, newsletters being sent out saying sign up for this credit card, sign up for that credit card, spend $4,000, get $500 within 90 days. Now, why should you be aware of this? Well, the reality is credit card issuers know that 95% of people plus are not going to fulfill the bonus promotion. That means more monies to the credit issuers and less monies to the consumers. It's the same game that stores do when they have a sale, right? Like buy one, get one free, or like a Black Friday sale. They hope that you just come into the store. Once you're into the store, they hope that you buy more than what you actually wanted to purchase. For example, let's say you wanted to buy one shirt for a maximum of $30 and you end up going to the store on Black Friday and you end up purchasing 5 t-shirts for a total of $150. You bought more than one shirt and you spent way more than $30. Meaning the sale made you purchase more, and even though you may have saved money, you technically spent way more than you wanted to and thus lost money. Now, if you genuinely wanted those shirts, fine. But the same thing applies to the bonus promotion. They hope that when you do this bonus promotion, they hope that A, you don't fulfill it, B, that you do fulfill it, but you pay it off slowly so that, there's debt and interest, or 3, you end up spending more than you actually wanted to, and so that even though you fulfill the bonus promotion, you spent let's say $7,000 instead of $1,000, or you generally bought $3,000 worth of stuff that you really didn't need just so you can get that $500 or $400 bonus promotion. Obviously, not everybody that ends up, going to a sale or signing up for a bonus promotion ends up buying more shirts than they have or spend more money than they want to. But the reality is most people do though, and you don't want to be that person. So in the case of credit card bonus promotion or churning, they offer you promotions such as spend, $4,000 within 90 days and you'll get $500. But they're really hoping you mess up, right? If you mess up, this means 3 things. 1, you never actually managed to fulfill the bonus promotion, and so they're hoping that you continue to use this card and keep it, and that by the 2nd year, they're gonna ding you that annual fee and collect that money from you. Now, if you do use the credit card's perks and benefits, such as travel credits, travel insurance policies, car rental insurance policies, extended warranty, purchase protection, mobile insurance policies, and flight, hotel, motel, car rental upgrades, sure, that's totally fine. But however, if you're not using the perks and benefits, then you're basically paying for nothing and paying for a service that you don't use. And so I recommend not doing that. And the reason why is because you're just giving free money to the credit issuer. So there's 2 things you can do to prevent this. 1, you can ask to downgrade that credit card to another credit card that they offer that has a no annual fee. And most credit issuers, financial institutions, or banks do this with no problem. You simply just call customer support and they will do it for you. And then 2 weeks later, you'll receive the new card and you're good to go. The second option, which I don't really recommend, is canceling that credit card before the 2nd annual fee starts. And the reason why I say don't do this is because you have already built a relationship with this credit card and credit issuer. And so this means 1, you built a time relationship with that, so your credit length is increased. The longer your credit length, the better it is for your credit score and credit report. And 2, your credit utilization is going to decrease. For example, let's say you have one credit card with a credit limit of $5,000 and a second credit card with a limit of another $5,000. In total, you have a credit limit of $10,000. And let's say you have a balance of $1,000. That means at the end of the month, you're only using 10% of your credit utilization. However, if you do cancel that second credit card, your credit limit, your total credit limit is going to drop from $10,000 to $5,000, and you're no longer using $1,000 out of $10,000, but $1,000 out of $5,000, which is 20%. And the higher your credit utilization is, the lower your credit score will be. And so it's better to just keep that credit limit so that your credit utilization doesn't decrease, and so your credit score stays the same or is higher. And lastly, when you do cancel your credit card with the credit issuer, you're also destroying that relationship that you built with that credit issuer. This is different from your credit score and your credit report. When you have a relationship with a financial institution, a bank, or a credit issuer, they're more inclined to give you better interest rates, better credit cards, better banking services such as checking or savings account, better mortgage rates, better financing rates for cars or business loans. And so, in my perspective, it's better just to keep that credit card with that specific issuer so you don't destroy that relationship either. And so I recommend going with option 1 rather than option 2. Now, there is a third option, and I really recommend not relying on this option because it may or may not work 100% of the time. And basically, this is calling in to your credit card's customer support line and asking if it's possible to waive the second annual fee. And if it's possible to waive the annual fee that's going to be coming up, or if it's already passed. And you simply just can't call in and be like, hey, can you please waive the annual fee? They're not really going to do that. You kind of have to give them a reason why. A good reason could be that, hey, I'm still looking forward towards this credit card. I still need some more time to decide if I really need this card. And by having more time and having this annual fee waived for this year, I can make a better decision on that. Not only that, if I do end up deciding to have this credit card, I am more inclined to refer your services to other friends and family because of your great customer support and credit platform. That's like a good excuse that you can give to allow the annual fee to be waived. Now, like I said, don't rely on this method because it's not 100% that they're going to do this. And not only that, you kind of have to call multiple times because you're going to probably get rejected the first 1 or 2. Now, you might be lucky and not get rejected, but in general, you're probably going to get rejected. Now, if you do, it may take up to like 10 to 20 phone calls. I know, it's a bit ridiculous, but it does work. Nowadays, I don't really do that because I'm no longer in a financial situation or a financial setting where I do, need that extra $100 or $200. And at the same time, I apply to that credit card, and so I would rather, own up to it and pay for that annual fee or downgrade it or cancel it. Now, I don't judge anyone else who's done this because in the past I have done it and it does work. So do as you please. However, I really do recommend option 1 out of all 3 options. So like I said, 1, you didn't manage to fulfill the bonus promotion at all, and so they gave you the annual fee on the second time and thus collecting money from you. Or 2, this can happen instead, that you do fulfill the bonus promotion, however, you cannot afford to pay the debt before the payment due date. And so you will be paying a 20% plus minus 10% APR interest. And depending on the length of time and the amount of credit you're borrowing, this can mean that the credit issuer is going to make more money off you minus the bonus promotion they gave you, right? Let's say if you borrow $4,000 for a year and 2 months, well then you're going to be paying more interest at that point where the bonus promotion is no longer profitable. And so in this scenario, the bank or the credit issuer won and the consumer lost. So be careful, see if you can pay before the payment due date and see if you can pay for that amount. And now 3, and so the third scenario can be that you do fulfill the bonus promotion criteria, however, you cannot pay at all anything back, whether it's the minimum payment or the actual payment due. And in this scenario, it's the worst. And I just want to let you know that credit issuers don't like it when you purchase goods or use your credit and cannot pay it back at all because technically they lose money. If you cannot pay the interest, the credit issuer basically declares it as a loss and writes it off. And in general, the credit issuer only makes pennies on the dollar. So if you spent $3,000, they probably only made $30. And if you cannot pay the $3,000 back, that means they lost $2,970. So they don't like this at all. And they don't like this even happening. This will be spoken about in a different episode. Check the description down below for a link to that video. Now with that being said, the moment you cannot make payments to your credit debt is the moment your credit report and your credit score are going to start sinking and get worse and worse. And this is when credit card churning will destroy your credit. And I just wanted to make it clear, losing your credit or destroying your credit over $3,000 or over a $500 bonus promotion is really not worth it. It's not worth it at all, especially in the long term, where your credit is used for a whole wide of other uses, which I'll be explaining further along. And the reason why it's so deadly too is because it takes most people 7 years, 7 years, okay, that's a lot of time to get their credit score and credit report fixed. You don't want to be in that boat because that boat is a sinking ship and nobody wants to be on a sinking ship. So make sure if you cannot afford the bonus promotion, not to do it at all because you really don't want to be damaging your credit score. So how can credit churning destroy your credit? We already said, one, when you cannot pay your credit debt at all, you basically are going to be destroying your credit score and credit report. And two, by applying to too many credit cards, you're going to be getting a lot of hard credit inquiries. The more hard credit inquiries you have, the more negative points you're going to have on your credit score. In general, credit inquiries are not too bad, but if you do need a mortgage anytime soon, or car financing, or an increased credit limit, it's not really recommended to do so many credit inquiries within a short period of time. They do eventually wear off after 2 to 4 years, depending on the country. In the US, it's 2 years. In Canada, it's like 3 or 5. In other countries, it's somewhere in between that. And just like I said, the moment you cannot pay your credit card debt is the moment you're going to start receiving derogatory remarks, such as late payment remarks and or collections because you cannot afford it and they just sold off that credit due to a collection agency that's trying to get it back from you, and that's also going to be on your credit report. And so even if your credit score may be good, the moment a credit issuer or financial institution looks at your credit report, they're going to see those derogatory remarks, and I'm telling you, like 99% of the time, you're going to get declined for anything else. Okay, so if you apply to another credit card, you're going to get declined. If you apply for a mortgage, you're going to get declined. If you apply to car financing, you're going to get declined. And that is a bad place to be. You don't want to be there. And so I mentioned about damaging your credit score and credit report due to the racked up debt and hard credit inquiries. However, you will also be destroying your relationship with that specific financial institution or credit issuer or bank. So let's just say this is Chase. You have a Chase Sapphire Reserve, you spend $4,000 and you can't afford to pay it back, and you end up not doing the payments and they send it off to collections and cancel your account. This also means that you may not be able to open a checking account with them, a savings account with them, and if you're an entrepreneur, you know, that's even worse because it may even become harder for you to open up a merchant account with them, which is used to, accept payments, business bank accounts, business loans, business lines of credit, right? You're going to be losing all that opportunity with Chase, and that might take anywhere between, again, 5 to 7 years. And a lot of banks do this where they ban users from their platform, from every service they provide. And so by damaging that relationship, you no longer can, let's say, work with Chase or with Wells Fargo or with Scotiabank or with BMO Harris, right? It doesn't matter. All banks more or less do this where they will ban you from their platform when they see you causing more harm than good. And again, I just want to note, if you are an entrepreneur, I think it's worthwhile not to do this. It's better to build that relationship with that bank so that you can continue to get better interest rates, to get better loans, to get larger credit limits, to get an easier time getting approved. Instead of waiting 3 weeks, it's 60 seconds or 1 day. So this does a lot of collateral damage. And I wouldn't want to damage my relationship with a bank, especially with a big bank such as Wells Fargo or Chase or Bank of America, or if you're in Canada, Bank of Montreal, RBC Bank, or Scotiabank. And if in other countries, I don't know the banks there, but in general, you do not want to destroy your relationship with the larger financial institutions just because they do offer better services at better rates. So one, we mentioned how it destroys your credit score and credit report if you cannot pay the debt on time. And two, we mentioned about how it destroys the relationship with the credit issuer or the financial institution. And 3, many people who do credit card churning successfully, they end up always purchasing things that they don't need, things that they don't want, things that don't really provide any value to them. And so even if they, spend $3,000 and get $500 back, they spent $3,000 on random things that they didn't really need. And in a way, it's a negative loss of $2,500, which is not winning for anybody. So you either lost money or you racked up debt, and this could either mean options 1 and 2, where your credit score and credit report's destroyed, or you just spend more money and you think you made money, but you didn't. Now 4, credit card churning is a short-term benefit. Like I repeat, it's a short-term benefit. It's not long-term at all. And so whether you fulfill the bonus promotion or not, it doesn't really matter. As long as you continue to use this credit card or have it active, then that's what matters. Because by having it active, like I said, you build that relationship with both the credit bureaus and also with your financial institution. And by doing that, you get better interest rates, better loans, the larger limits, easier time for approvals, and overall have access to more tools that will increase your financial wealth, right? To open up like a margin account, which is a stock brokerage account where you can borrow money to invest into stocks, not that I'm saying borrow money to invest into stocks, is like a tool that you can't get if your credit is poor, right? So don't think of credit cards simply just as damaging your credit card. Think of it as a huge long-term collateral damage to a lot of other tools. I mentioned about credit scores and credit reports and building a relationship with financial institutions, banks, or credit issuers. And I just wanted to explain furthermore that within these banks and credit issuers and financial institutions, they have something what I call an insider score. And this insider score is based on algorithms and AI that they use to determine if clients are of value to them. And if clients are of value to them, like I mentioned many times, they'll get access to the better rates, the larger credit limits, easier time for approvals, and just overall better customer support. This is 100% true. Simply by having a checking account at Chase for 1 year, it will get you approved 100 times easier for a credit card or loan or financing than somebody who doesn't have a relationship at all with Chase. And it's not only Chase that does this, like I said, every other bank does this too. For more information on the super secret insider score, check out the link in the description below after you finish watching this video. And so the long term is better because by having access to a source of credit with an interest rate of 3% with a credit limit of $100,000 allows for more opportunities, whether stabilization, savings, or wealth increasing. Or you can get a credit card with a $1,000 limit, a 20% APR interest rate, and keep canceling it, and so that you can keep applying, and that way you never actually build your relationship with the credit bureaus and with the credit issuer, and you're stuck with that. Right? Do you want the higher limits and the better interest rates, or do you simply just want to keep making $300 every time and be stuck with these high interest rates and low credit limits? I'd rather go with the previous option, which is the higher credit limits and the low interest rates and getting an easier time for approvals for business loans, lines of credit, etc. Especially if you're an entrepreneur, and especially if later on in the years, if you want to do something in terms of business or you need extra money to finance a new idea, right? I really recommend going with the previous option than wasting your time, filling these bonus promotions and just making $300 or $500. And the last reason why you really don't want to destroy your credit, especially for credit card churning, is because, like I mentioned many times, your credit is used for you to get approved for rent, leasing a place, mortgaging a house or a home or apartment, financing a car, business loans, business lines of credit, personal lines of credit, renting a car, even for employment. Some employers ask for your credit score and credit report. And so by damaging your credit score and credit report for a measly, $500 bonus promotion, it really just doesn't make sense. The long-term benefits just outweigh simply the short-term benefits, right? Like, this can literally mean homelessness. Like, I don't agree with this at all. I don't understand why we have such a harsh system in North America where, you know, just to get simple housing, you need your credit report and your credit score to be good. Because in my perspective, homes and housing should be a human right and everyone should have access to a home, especially in a first world country in the 21st century. But apparently that's the system that we currently live in. So I really recommend, please, 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 take care of your credit score and your credit report. If you do want to churn credit cards and if you do want to churn it well, I really recommend 1, do it passively. 2, apply for the cards that you truly do want. Not like, you know, don't apply to my Amex Cobalt card or Amex Platinum card and you're never really going to use its benefits and perks and you're never really going to be using the card at all. 3, be in tune with your finances. This means how much money you make and how much money you spend. To do this, you simply just use a spreadsheet where you can input your expenses and input how much money, and it basically shows you how much money you spend. And by knowing how much you spend, you basically get an idea if you can fulfill the bonus promotion or not, right? Can you spend $2,000 within 90 days or not? Can you spend $6,000 within 90 days or not? And with that information, you can definitely make those decisions. And 5, most importantly, you have either a lot of assets, a lot of income, or you have steady income. Like, if you don't have steady income or you're not sitting on money, then how are you really going to fulfill these bonus promotions, right? You don't want to be using shady tactics and things like manufactured spend or whatever and destroy your relationship. And at the same time, I really recommend staying away from things like retention offers and anything that's pushing your limits, because such as, you know, canceling your card and then reapplying and canceling your card and reapplying. Like, Chase isn't dumb. They can see what you're doing. They see all the accounts you currently have and they'll get an idea of what you're doing. And if they see what you're doing, this may get you banned. And I know people getting banned. A lot of people, like on YouTube, won't say why they get banned, but I'm like 99% sure they're getting banned because they're doing some type of credit card retention, credit card manufactured spend, credit card, you know, canceling and reapplying, or, you know, something weird and something not a normal consumer or valuable customer is doing. And so I'm not hating on anyone doing credit card churning. I'm just letting people know, if you are credit card churning, please do it properly. Please be in tune with your inflow and outflow of cash, and don't get enticed and do impulsive purchases or doing anything impulsive, such as applying to a bunch of credit cards and not getting everything in order. And so that's the end of me. If you enjoyed watching this video, don't forget to subscribe, like, and hit that notification bell, and I'll see you in the next video. And look into the description below. I got links to other videos that will be of value to you. Have a great day and see you next time.